Hello and welcome to the Stock Planner channel. I'd like to add a defense stock. This channel is an education channel. We're sharing ideas. And today we're going to talk about aerospace defense. Do your own due diligence. You're responsible for your trades. Trading's risky. Let's get started. Well, I would like to add a aerospace and defense company to my portfolio. And I have several on there already. Let's take a second look at some of these. This is in light with the situation that's occurring in Afghanistan, and I believe based on the infrastructure bill, in that situation, I think companies that are in the aerospace and defense world receive some money. So I'm going to take this from a different point of view. We are swing traders, and swing traders are technical traders. But I might look at the fundamentals first, and then once I have a list of stocks that, in my case, undervalued, I want aerospace stocks that are undervalued, I will check them against my technical indicators and my single reporting program that I wrote in OmniBroker. So I'll back test it. Instead of counting them by hand, I will count them using automation. So I'm going to start out with Simply Wall Street, and they have a screener, and I've screened for aerospace and defense stocks, and I also want them to be undervalued. And then ETFs and funds are okay. It's okay to have them as well. But I want the value to be undervalued stocks. And I came up with 17 companies: Raytheon, Lockheed Martin, Northrop Grumman, General Dynamics. They're all on my list. These two are not. Huntington Ingalls, I don't know why that's not on, because that's the shipyard here located in Williamsburg, where I'm located at. Not familiar with those. KTOS is definitely on my watch list, and I have not had a lot of luck trading with it. And these other ones I don't know anything about. But we'll look at the green ones first. And this is slightly green, but the object is to get a snowflake that's filled up. And the more fillings in the snowflake, the better the company is doing. And this first one is Raytheon RTX. This is Raytheon. It's not swinging that well, but if you capture that swing and that one, you do quite well. And the indicator did okay there, but it going short here probably did not go well. So I could go ahead and do this manually, and TradingView is free, and do this manually and count the number of wins and losses. But I'm going to do it automatically using my OmniBroker. So the object is to find stocks that trade well with your strategy and indicators. That's the object. You want to be able to find the indicators that predict these mood swings. Happy there, sad there. So that's why we backtest. This is OmniBroker, and it's the same indicators that I have over on TradingView. This is my zigzag. This is zero lag. And when the zero lag is above 0, we can go short. When it's below, and this is right here, it's significantly below. And this is stochastic RSI. When it's below the 80 or 20 or above the 80, it comes back around. You could take a long. And this is the RSI 4. When it comes below the 30 and comes back around, that's the time to take a short. And when they all occur within a few bars of each other, 2-3 bars, you can take a long. And this would definitely be a winner. So I have a program that counts those and takes longs and shorts based on that strategy. And it's the RSI stochastic MACD strategy. And it's the current symbol. And I'm back testing it from the first of the year till now. And run a back test. And we get a few trades at profit. And then I shut this thing down after 18 bars. And we have a small account, and it's $5,000 start and $5,000 margin. And after 5 trades, we got a grand total of $16. That's not good for me. 2 winners and 3 losers. This is not. So RTX does not work well with my system. Lockheed Martin, LMT, and Northrop Grumman, NOC. Nice snowflakes there. Lockheed Martin currently is trading below its 50 moving average, and that means it's in a downtrend. Let's run our program, back testing it that quick. We got 5 trades. Let's see if we do a little better job. than we had with, no, this is not working with my system either. 2 winners and 3 losers. Not good. NOC seems to be in a holding pattern. Back testing it. A few more trades. No winners. 4 winners and 3 losers, but still lost overall. General Dynamics and KTOS. See if they work with our system, my system. If the stocks don't work with your strategy, you have to come up with another strategy or some other stocks. General Dynamics trading above its 50. That looks nice. Nice long trend. Some consolidation right there. Let's get our back tester out. 7 trades, 3 winners and 4 losers. That's not cool. Going back 1 year, so this is now a year and a half. A few more trades. We had a positive result there. 20 trades. We made $40. That doesn't sound good. 11 winners, 9 losers. General Dynamics doesn't seem to be can't find anything here. KTOS, nice swings. Let's see what we got. This was on the 20, but we were testing the other ones out from the first of the year, so we might have to go back to that. 22 trades over the last 2 years, and you had a 63%. That's better, but we have to go ahead and test this on the same criteria, which is 2021, January. About 8 months. And then we have some profits. That's cool. $54, 9 trades. We have a basically winning system, and so you have a good risk reward. You could do that. So KTOS is one that is a positive. In other words, it didn't give me a lot of money, but we're only changing $1,000 at a time, and your risk-adjusted return is $13. That's nothing as well, but it is a winning system, and that's the ones that I really have on my watch list. So I do not have Huntington Ingalls and L3 Harris. 1, 2, 3, 4, 5, 6, 7. Current open trade there, July 26th. Not profitable. 1, 2, 3 losses. Overall losing. 7 trades so far. Has a positive winning rate. I like a system that can win more than that. Nice long swings there. Huntington Ingalls. Newport News Shipyard. 5 trades. 3 winners, 2 losers. $31. It's a winning system. So basically we looked at these and these. I want to look at RADA and see what we got there. That snowflake seems to be pretty full. So we'll take a look at that. Looking at RADA, we see it's swinging pretty decently. Up, down, up, down. Let's see how it does against our algorithm. Back testing it. Oh, we see some profits here. 476 in the last 7 or 8 months. Net profit of nearly 5%. That's assuming that you have your whole $10,000 invested for the year, which we don't. We only were in and out. We made 9 trades, and the average was about 7 or 8 bars. So we had our money sitting idle, including the margin, for a lot of that time. So the risk-adjusted return is about 200. That is terrific. Let's see what the win rate is to this. 9 trades, winners 78%, and losers 2%. Wow. Let's see what it does for the last 20 months. 21 trades, that's about a trade a month. Net profit did not increase that much over that period of time. And the net profit percentage stayed about the same for the 20 months. That's pretty steady. And your risk adjusted came down from 200 to 61. So the last 8 months for this stock seems to be pretty good. And over time, it's still good. It has a 76% win rate. That's decent. I can do something with that. And using options, I can get this percentage to be a little higher and risk less money. So I can either buy the stock or use options. But in this case, I'm back testing it as if I was buying the stock. I can do something with this. Let's find out a little bit more about the fundamentals of this stock and see what's going. We can see this is relatively cheap. It's $11. So, I don't like too cheap the stock. But it looks like we might find a diamond in the rough. RADA is a defense technology company that develops, manufactures, markets, and sells defense electronics to the Air Force, defense companies worldwide. Avionics systems. I kind of knew this, okay? I was in the Air Force for 20 years, so I have this natural instinct. Strategic relations with Israel, Hindustan Aeronautics, that's probably Indian, Boeing, European Air Defense, trading at 46 or 47% below its fair value. And I understand the fair value is free cash flow. And that is money after you paid all your bills. You have money to invest in the business or give out dividends and things like that. And it's used as a predictor for the value of the stock in the future. They're the competitors. I like Honeywell, by the way. It's a stock that trades well with my indicator. And I thought RTX did, but it apparently is not. Here's the current price. This is a cheapie, and it should be trading at 20. Future growth looks bright, and the company looks bright based on the analyst opinion. There's your industry and market. It's doing better. I love to see that. Maybe we find a little diamond in the rough here. Probably not trading at a high volume, but we'll say that in a minute. And the earnings and revenue history has been steadily increasing. And no real past 5 years. But this year, terrific. And it probably doesn't pay a dividend. No dividend. It looks like it's been a range here. Target price is 17 according to FinBiz. Average volume is 500. That's the minimum. I like it to be about 750. Optional and shortable, yes. And it has a buy rating, a pretty high buy rating. And profitable. Cool. Tip rank says it's only being followed by 2 analysts, so you either love it or don't love it. And they're saying the average is going to be 1650. Is a buy rating, and they give it a 6 ranking. Hedge fund activity is decreased, but these look good. The earnings date is November, the end of November. And remember, Simply Wall Street is saying this should be trading at $21. I mean, that's some distance to go to. For cheap stock, I like this, RADA. Well, returning back to TradingView, I had thought that RTX, and I've played this several times this year, would have done better. KTOS or Kratos is okay, but my new one, RADA, which I don't have on my watch list yet, the major swings look good, and even the minor swings look good. Below, but not significantly, the stochastic come around, and so did the RSI. That would have predicted that. Above, come around, all occurring with a couple days of each other. That would have predicted that. Below, not significantly, here and here, I might have not took that. So I would have been a little wary. Above, that's the rule. It doesn't. I mean, all I require for my program is just it has to be above. And we want this to come around, but it didn't. And there, you might have took that one right there, and that would have won as well. Looks like everything is ready to come around this way. Is that the support? Well, it's at support, and I might sell a put. In other words, I sell the right for them whoever buys it to put a stock to me at a later date. If the price goes up, they're not going to put it to me at this price. But if the stock goes down, I have to agree to buy the stock from them at that price, and I lose. But I don't mind owning this stock at $11. So I think this is a good sell put, and I think it's a good action for the next day or two. What do you think? RADA, Aerospace Defense. Like and subscribe to the video. Do your own due diligence. Have a little fun. Don't take yourself too seriously. Happy trading. Catch you on the flip.